401k hardship withdrawals is at a all-time high. Hello, leaders of tomorrow, back at you with another video. And in this video, we're going to talk about 401ks and them being withdrawn from individuals' accounts at an all-time high. Okay, guys. So according to this Wall Street Journal, as you can see behind me here, in 2025, over 6% of Americans took out with a hardship or some type of loan out of their 401k. Okay, guys, and it is showing signs of an alarming situation that individuals or taxpayers have to go into their 401ks at a higher rate to borrow from their 401ks or take a hardship. Now, borrowing, guys, taking a loan out and a hardship are actually two different things. And if you are to take money out, it is recommended that you take out a loan, because at least with the loan you'll be paying it back. Whereas a hardship, there is no payback, and you would have to pay tax on those gains that were made, or just tax taking out the funds out of your 401k. So, guys, this is concerning because what it basically shows is that the average American salary is not enough to cover their expenses and their bills. Okay, so they need extra money to cover these expenses, whether it be rent, whether it be taking care of another family member, bills, backed up credit cards, things of that sort. Dipping into the 401k is a sign that people are more so financially struggling. And the one of the big things one of the big reasons why this is a concern is that, our 401ks is really for our retirement. When we get to a certain age, um we're able to have a certain amount of money to take care of ourselves, other than, say, our pension, our social security, and things of that sort, which those incomes may not be enough to cover our retirement. So the 401k exists as a supplement to help us get through as we age. So when you see more Americans raiding their 401ks, not only are they really taken away from future monies that they could have in their retirement, but they're basically losing out on a growing market, a growing stock market, which helps amplify returns. Okay, guys, and every time these individuals take out of their 401k, that percentage of incremental gains get less and less. Okay, guys, so taking out money out of your 401k, guys, is not necessarily a good thing, particularly if it's a hardship. Like I said, if it's a loan, you'll be paying it back. But if it's a hardship, um, you're missing out on capital asset increases, right? And also you're taking away from future earnings in your retirement years. Okay, so the question is, guys, is how can this be addressed? Uh, do Americans need to be making more money in wages and salaries? Does inflation need to come down? Is it a combination of both? What is it that is causing the American dream to basically slip away from more and more Americans to the point where they have to dip into their retirement? That is a question that needs to be asked. But anyway, I would love to know your guys' comments, your thoughts in the comments below. Please comment on the video. Tell me what you think. Do you think that there is a systematic problem with the economy, being that more and more people are going to their 401k? Let me know what you think. If you like the video or the channel, please follow the channel, guys. See you guys later.